Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It is Wednesday, the 27th of June, 2007. The market's closed, and we had a big turnaround here. Surprise, surprise. A lot of people were pointing out, as I did yesterday, that the market had made a lower low. But unlike most people who are looking for that to be the end of the world, I thought that yesterday I said that a lot of times when the market makes a lower low, high profile area breaks down like that we get a move in the opposite direction a lot of times. What I was looking for and hoping for, I said, was a shakeout down towards about 148 to 148.50. Today's low was 148.06, and then the turnaround I thought could potentially occur. Now, what I did say was we needed to see it get above the 150.5 level, but intraday you can see that the pattern of lower lows was broken right here. At that point, it would have made sense to get long with a stop above what at that point was the higher low. So right now we do have a higher low and a higher high, but we've still got this declining 5-day moving average. With a 5-day moving average declining like that, what I'm anticipating is a little bit further pullback. Maybe a test of that 149.5 level would be good. Actually, that had set up real nicely. But when we look at the daily time frame, nothing's changed here. We're still overall neutral / cautious on this environment. Now, we had a lot of people, I had saw comments in YouTube where people post comments saying, come on, just admit it, we're bearish. Say that you're bearish. And I said, now, I'm going to call it the way I see it, which is overall neutral. Understanding the way the markets work and anticipating what should happen. It doesn't mean it always will happen the way the way I lay it out, but that's what stops are for. But to anticipate what the market should do, you have to understand the cyclical rhythm of the market, and it just doesn't automatically reverse most times. We have a process of distribution followed by the decline, and with the 50-day moving average still rising, I use that kind of as a quick indicator of what's the overall trend. The overall trend is still higher, but we have mixed signals and have had those mixed signals for 2.5 weeks now, which is the point where I said overall I'm neutral on this market on the longer term time frame. When we break it down to shorter term time frames, that's where we get our trading direction from. When the market broke below 152.5, that put the short term trend lower. How low it was going to go was anyone's guess, but it looks as though we're starting to see that little bottoming process. So maybe a little bit of back and forth action and then a rally. We've got the Fed tomorrow, and we've got a holiday shortened week next week coming up as well, which I don't think I'll be posting any videos for. But the point is, it looks like the market has found that support, and it occurred where most people were expecting it to fall off a cliff. Markets usually don't break down hard after a drop from 153.5 down to 148, dropping 4.5% or so first and then declining isn't the normal way that the markets work. So you just have to understand what's normal, what's most likely, and try and anticipate what's going to happen next, and position yourself accordingly. When in doubt, sidelines is the best opportunity. We still have an overall neutral picture here, I think, on the daily time frame. Today's rally was impressive. It was an outside day up, meaning that today's low and high both engulfed yesterday's range. So that's typically considered bullish, but that's candlestick nonsense, which for the most part I think candlestick, memorizing those formations and that doesn't make a lot of sense. You're much better off looking at the short term, the intraday action to determine what's going to happen next. And in here, as bullish as that daily candle looks, I think prudent course of action is to wait for a little bit of a pullback and then buy the next move higher from there. But again, very impressive turnaround, 1.5% today in the spiders. The Qs, they survived their first test of the 50-day moving average, and the spiders let's just take a look at that once again. We're still below that 50-day moving average, which freaks a lot of people out. But again, it's the direction of the moving average that matters. No one else talks about that, but that's something that's very important. It's much more important than did the market close above or below it for 1 or 2 trading sessions. It's the overall trend. It's the 50-day trend, not 2 days relative to the 50-day trend. But we had a successful test here of that 50-day moving average. Market bounced nicely higher, and on the intraday time frame, what I was thinking was that a move above 47.20 and then 47.40 would signal that the buyers had regained control. We do have that now. We've got the 5-day moving average that is flattened out. What I'd like to see in here would be a pullback maybe down towards $47.35 or so, and then a rally higher. And you could make a case that that would set up a little inverted head and shoulders pattern on this short-term time frame, which we could then come up, if we wanted, with a target of 46.70 up to 46, let's just call it 60, so we could add 90 cents to that and come up with a target of 48.50, which 48.50 would put us in new high territory, which is what most people are not expecting to happen, which is why you have to consider it a very viable position to happen. That is one definite scenario. Let's wait for a pullback and then look to buy strength. Maybe the Fed says something. I don't know what the catalyst might be, but we've got a strong market here. You know, it was funny today, by the way, too. I usually don't watch the television. I had it on today. One of these reporters, who I won't name, was saying how every day at 2 o'clock, that's when the sellers come into this market. And wouldn't you know it, at 2 o'clock today, what did we have happen? We had the market really begin to break out right here. This is 2 o'clock right there. And that's where we really saw you know, the market in positive territory. It held those gains and then really pushed higher. That same reporter earlier in the day said the SMH is something that you can trade. It's the semiconductors, and it's at an all-time high, or new 52-week high. Wrong. It's not at a 52-week high. It hit a 52-week high last week, and when it hit that high and backed off, I thought that it should move down to about 37.50 to find support. I thought that 37.50 was the important level for the market to find support. And yesterday I said that in order for the buyers to have retaken control, we need to see the SMH back up above $38 a share. Well, it took that $38 a share level out early on today, blasted right through that 5-day moving average as well, and continued to move higher along the path of least resistance, which on this daily time frame continues to be higher. We've got a rising 10, 20, and 50-day moving average, and we've got a fantastic looking weekly time frame where this old resistance was tested, did act as support, and now we should be looking for a move up towards about that 40 level or so. That's the way the semis look. We were, you know, for a day or two I was a little bit cautious on them, but it looks like the buyers have regained control. I think that if you're looking to buy the SMH, again, you probably want to see a pullback down towards that 5-day moving average and then buy strength from there. The IWM had a very good day as well. The Russell 2000 was up 2.2%, which was equal to the same percentage move in the semiconductors. And again, this group is just overall neutral. Back up above the middle point of the range. I thought that taking out the 83 level was where the buyers were going to take control. They've got control back again. Now look for a pullback and maybe test to that area. Same kind of scenario you could set up in here, that maybe this is a shoulder ahead, and then now it maybe needs to form another shoulder here, break past that resistance at around 83.60 or so, and that will give us a target approximately $2 higher. And again, yesterday I had pointed out this head and shoulder, which looked like a head and shoulder top, but with a rising 50-day moving average, it doesn't make as much sense to have the conviction in those price patterns. This isn't something that necessarily you want to trade either, but it's a good indication of what one potential scenario for the IWM.